This just in. Switch to OUTsurance and save on your car insurance or ask for up to 1,500 Rand. News Leader, proudly brought to you by OUTsurance.
Welcome back. Now, Spur Corporation is dishing out strong results with total restaurant sales for the 6 months rising 10% to 5.9 billion Rand. The dining franchise group reported headline earnings per share up nearly 14% despite ongoing pressure on disposable income and infrastructure challenges. Joining us now to take us through the ingredients behind the strong performance is company CEO Val Nichas. Val, thank you so much for your time today. Maybe let's start off with how you would characterize the 6 months that was. As I highlighted there, consumer spending under pressure, but you've managed to deliver top and bottom line growth. What drove that resilience?
Good afternoon, Natalie. Yes, I think it wasn't an easy 6 months, especially for our franchise network. Whilst the brands did deliver the overall result, there are certain shopping nodes that have taken a lot more strain. But probably the success has been the fact that the brands have got quite a loyal following. We've got a high number of loyal consumers that frequent us often. And the teams, together with the franchisees, I think embarked on quite a lot of activities, special offers, value-added campaigns, and campaigns to really attract the consumer and offer some value.
Yeah.
So I think it was a collective effort, but that doesn't mean that it wasn't a tough year overall.
What I found interesting was that customer numbers were up and average spend per head grew ahead of menu price inflation. This, of course, despite households being under pressure. Does this by any chance suggest that we're starting to see or starting to reap the rewards of easing inflation as well as those lower interest rates?
I'm not sure if it's easing inflation. I think what we try and do when there's menu input price increases, we can't transfer all of the increase to the consumer.
Yes.
That wouldn't be wise. But what we try and do is ensure that our known value items are protected. So those entry-level items that are a little bit more affordable and of value, to watch that we hold the prices there, and increase prices where the product is a little bit more luxurious or it's a higher ticket item and the consumer who buys that item isn't as price sensitive.
Okay.
But no, I think menu inflation is a tough one, especially with a recent foot and mouth disease.
Yes.
So I think it has been tough to try and maintain the margin for the franchisee, yet offer value to the consumer.
And that brings me to my next question around foot and mouth disease, particularly what's playing out at Rocco Mama's. To what extent have you passed those costs on, and how sensitive are customers been to some of those increases?
So I think all our brands obviously were impacted by the hike in the meat price.
Yes.
The difference, as we said, a lot of the other brands have got a range of proteins to offer the consumer, from chicken, fish, pork, etc. Rocco Mama's also sell a little bit of chicken, and they do sell ribs as well. But their core item is a smash burger, smash patty that is actually prepared on the premises. It's fresh product that's produced. And because they're obviously a smash burger joint, a higher percentage of their volume is a beef smash.
Yes.
We do sell some chicken burgers, and we sell quite a lot of vegetarian burgers, but in essence, it's a bigger contributor. So yes, no, not all the increase could be passed on any of the menus. It would be too astronomical. But we just think that perhaps the frequency wasn't as good as it could have been. We did see a distinct drop in the latter part of this reporting period.
Okay. Moving over to John Dory's, the only brand that I noticed recorded a decline in sales, down 11.7%. What's weighing on that brand? I know the team has plans to turn things around there.
So yes, the seafood category is quite an interesting category. It's definitely a category we want to continue. We do believe South Africans love fish. I know that John Dory's at the outset when it launched, it started in KZN and it was known in the Natal area. People loved it, and I think from the minute it tried to expand into the inland region like Gauteng and the likes of Cape Town, I'm not sure it succeeded as well as it succeeded in KZN. However, we still believe the brand has opportunity. It's still making a profit, even though it's a declining profit.
Yeah.
So we are still of the belief, working with our franchisees, that there's still a large part of the network that can be sustained and could offer the consumer a good seafood experience.
Yeah. Val, looking ahead to the next 6 months, I mean, we heard from Finance Minister Enoch Gorongwana yesterday, Treasury forecasting modest growth of 1.6% for 2026. And within the budget, it includes some tax relief for consumers. Do you expect that to translate into perhaps a better spending power, better purchasing power for consumers?
Look, we're always hopeful when we hear these projections from various institutions as well as the Minister of Finance. However, my view is that I think the next 6 to 8 months are still going to continue to be tough.
Okay.
I think there's a very competitive market and we're going to have to look quite sharp. I think perhaps after 6 to 8 months, we might see some glimmer of improvement.
And it's within that competitive market that you are trying to gain even more market share, the group pushing ahead with new restaurant openings. Where are you seeing the strongest opportunities, and how disciplined are you being when it comes to capital allocation?
Okay, so our restaurant expansion group, other than the odd company-owned store, like the one that we're opening for Doppio Bistro in Johannesburg North in the next few weeks, generally all our restaurants are franchised. So it's the franchisee who chooses to invest by taking on the franchise brand and building the restaurant. But we will be looking at, and we do look at all the time, where the new developments are.
Okay.
So either where the areas where we're not fully saturated, where there's opportunity, and where great malls or great shopping nodes are going up, then we obviously try and secure a site there.
All right, let's leave it there. Thank you so much for your time and taking us through the 6 months that was. We will catch up again at the full year mark. That was Val Nichas, CEO of Spur Corporation.
Breaking news. Switch to Outsurance Business Insurance and get a 20% discount. News Leader, proudly brought to you by Outsurance.